Good evening, everyone. Just hi for understanding that everyone is able to see this streaming. Hello, Devesh. What we do is, hello, Satyavani. I request you to see everyone the presentation, what has been mailed by the institute to all the fellow members, to my colleagues, to my senior members, because their wisdom is very much important in this kind of a situation. What we need to analyze is impact of COVID-19, the virus which is going on this earth right now, on the financial statement, reporting, and taxation. Before understanding that, let's understand some non-financial elements. We have to see that there would be a expectation of an economic slowdown in the whole globe, not only in India, not only in Maharashtra, it is in the whole globe. How much we would be impacted, how much our state would be impacted, how much our MNCs would be impacted, how much our industries would be impacted, how much our practice would be impacted has to be analyzed. And everything has to be crooked down to reporting of the financial statements and the taxation of it, how the taxation will flow. Because everything, once the economy slows down, direct tax is the first thing which gets impacted. To understand that, let's understand some important dates. First is 22nd March 2020, when a Janta curfew was imposed. Definitely, lockdown and shutdown of the business was done by people before that also. Many of them were in the format of shutdown, they were reducing their business. Although many of the offices already shuttered their offices before this Janta curfew was there. They started giving leave to the people, to the employees, and they were not able to take the risk of this disease getting transferred from one person to another. So there would be other relevant dates as well. But for us as a financial reporting aspects, 22nd March becomes the very relevant date. The second relevant date is 24th March, which was the nationwide lockdown. Why that date is important? Because not only Maharashtra, not only Delhi, not only Bangalore, not only Tamil Nadu, the whole India was into the shutdown. And now one has to understand other things also. The other information is that these lockdowns would be not opened into one go. It would be done into phases. Now let's understand where we are. We are in Maharashtra. And in Maharashtra, the cases have been more than 1,000 now. Keeping more than 1,000, it is the most hotspot of COVID-19. So Maharashtra won't be open. That is for sure from the lockdown. The impact on Maharashtra would be comparatively higher than the other states. And how it will impact our consolidated financial statement where our presence is cross multi-states. How the impacts would be when we are an MNC and our parent company or the other companies are in other countries. What kind of a material misstatements can be done by us? What kind of inventory management can be done by us? How we can report the internal financial control reporting. So this all aspect has to be considered while doing the audit for the year 31st March 2019. Keeping that into the picture, the institute has already issued a publication, which is a 50-page publication. I have taken out the gems out of it, and we would be discussing certain elements out of it. The most critical element, which would be impacted to us as a SMPs as well. At the same time, it would be very much critical to maintain our quality of audit as well. In our presentation, what I have done is I have created certain questions which would be in my mind as a chartered accountant or in the mind of a chartered accountant himself. So what are the things? First is actually we missed the date of 31st March, which is actually very critical from the cutoff procedures are concerned. What kind of cutoff procedures we follow? First is the most important, that is inventory. We take the physical inventory everywhere. If not on 31st March, maybe for first week of April, our inventory is going on. So we missed that date. What we need to do about it? Then, will this lockdown impact the inventory valuation? We have to understand that as well. Then I have understood something called impairment of our non-financial assets, the fixed assets, and certain important dates which has been transferred. The date of filing, written filing, which has been extended by the Honorable Finance Minister. And many of the questions which are asked by our clients, which we need to answer. What changes we need to do our audit procedures into a systematic pattern has to be analyzed. Now, impact on the business. Definitely, production has been completely into shutdown. There is a complete lockdown as far the production is concerned. The personnel is disrupted. We have a very dangerous picture in our mind when thousands of people were at the border of Delhi, maybe the border of Bombay, Maharashtra, what we can say, which were transiting from one state to another because of this COVID. This will disrupt the industry further. They coming back, then the production starting, another thing. The supply chain management. The supply chain management is completely disrupted right now. The other thing is facility managements. The whole thing are into a jeopardize because of this lockdown. So the many companies have to start preparing something called business continuity plan or a contingency plan, because the turnover which they have achieved in the past will never be projected into the future. That would be completely different because they need to restore many of the production capacities, many of the personnel management, many of the supply chain management again, and many of the facility managements again. So what changes we need to do as an audit procedure is concerned, keeping the scenario what we discussed right now is concerned. Let's see the area requires special attention of the auditor. Risk of material driven statements. This is the first and the foremost thing which we need to discuss. We would be materially misstating if our inventory is not properly valued. We would be materially misstating if our assets are not being shown as an impairment level. The reason is impairment testing previously was fine because there was something called going concern. Many of the companies will be having an impact on the going concern assumption in itself. So keeping that into the picture, one has to do the modification to his observations as well. Assessing the financial impact on reasonable estimates. Warranty claims. The claim which are from insurance, the payouts. We do certain estimations in that. The life of an asset while calculating the depreciation. This is an estimation. Those whole estimation will need a revision. Valuation and inventory, what we discussed, yes. Consolidated financial statement. As we discussed, the companies would be having some base in Maharashtra, would be having some base in Uttarakhand, maybe some base in Gujarat. Maybe Maharashtra will not open, Gujarat will open, and Uttarakhand will open. But this all three companies are linked to each other, and how the consolidation of their subsidiaries would be done in a systematic manner, and what kind of a procedures we need to follow on that. Fortunately or unfortunately, this particular lockdown has been declared somewhere 10 days before the year ending. So basically, the whole year has been surpassed. Definitely, 2019-20 was not good as per the business is concerned, but definitely better year than anything else. So many things which would be coming would be the subsequent event. The date of financial statement would be 31st March, but definitely the event occurring after that will have the major impact compared to what the impact would be of the events which are already done in 31st March. Shutdown in March was only for 11 days, but the impact of that, the personal expenses, the expenses which would be for the shutdown, the production capacity gone down, the market gone down, this whole would be impacted in the later part, in the later year. It should be the subsequent year, where your estimations, your every other adjusting things has to be taken into consideration. So this becomes a very difficult aspect as per reporting of that financial aspect is concerned. Many of the companies would be suffering with the going concern concept itself, because many of the industries would be falling into the shutdown as well because of this COVID. This evaluating the work of the management of experts, how well the management is able to understand this particular situation, how well they are able to maintain a business continuity plan or contingency plan is very important. And the representation, what we have to take for the audits which we do, the representation, how it has to be formed, and what kind of an opinions we need to form, that has to be taken into consideration. Reporting of the key matters, key audit matters. The first key audit matter is how this COVID was disclosed in their books of accounts and other information. What kind of another information we need to maintain with ourselves other than the financial information, so that we are able to substantiate the opinion which we have formed on the financial statement. The most important thing, due to lockdown, there was a lapses in internal control procedures. So how the IFC would be reported systematically? Lapses would be in this pattern that if you have to immediately shut down and lock down the whole factory in itself, what you will do with the inventory management, what you will do with the personnel management, what you will do with the cost of traveling and every other voucher and every other aspects is concerned. So how will you report on the internal financial controls? IFC, what we need to sign. The external confirmation. We will come to it with a very good example of revenue recognition where external confirmation will play an important role. In this kind of a scenario where there is a lockdown, there are chances of fraud taking place in this kind of a scenario. The company is shut down. Many of them will have security. Many of them won't have security. So what in case there is a fraud taken place by the management or by the employees or the personnel of the management? How need to be taken care? How need to be reported as is a matter of concern. Let's see what are the important areas to be checked by us by taking into the picture. First is basic is impairment. So far as an auditor, we have never reported on the impairment, keeping the going concern into the picture. The value in use is already considered by us. When we say value in use, that means the cash flow generated from the net asset value is equivalent to the value in use. So we always say there is no impairment as such. But today, the scenario is completely changed. So we need to see whether the property, plant, and equipments, the intangible assets, the valuation of impairment of the receivable is concerned, whether that would be received or not. Loans and advances. This whole need to be properly valued and put it into the impairment testing binoculars. Valuation of the defined plans and obligations for employees. Due to this lockdown, personnel is a separate issue in itself. The salary what we need to pay, many of the company decided work from home would be paid only 60% of their basic salary, maybe 50% of their salary, 40% of their salary, 70%. Whether that is legally correct or not, whether the auditor has to take some legal experts opinion for that or not, that whether he can do the reduction of salary or not, and if yes, whether it is permitted, because we have seen many circulars, you cannot reduce the salary, you cannot allow anyone to have the deduction of any of the salary. So what kind of a legal opinions or third party experts work we need to rely on to arrive at what salaries we are paying to the employees by the companies. Stock compensation, performance conditions and obligations, contractual penalties. Many of them due to lockdown. Examples, there was a work need to be completed because of that particular project with some timeline, but that was not completed. So when that particular project is not completed, what we need to do? Going concern impact should be checked. However, if there is a plan for future, no challenge to be a going concern. Loss is not the indicator of being going concern. Yes, sir, extremely agree with you. Going concern impact is only in case where the completely net worth has been eroded by the company. This is one, or there is a continuous losses, and the losses has actually eroded the net worth. Definitely, the auditor has to take his personal call and opinion on that, and then only he can go ahead with that. I agree with your point, sir. So contractual penalty has to be considered. That is very important. Then employment termination benefits. Many of the companies has been reducing their employment benefits, are getting terminated. So when they terminate the employees, they need to define what cost they have to bear on the benefits on the termination, which they need to give it to the employees. Insurance recoveries related to business interruptions. Whatever the insurance recoveries has to be done has to be decided by the management. This is purely on the perspective of the management, and we have to take care of the aspects of the accounting and all. Onerous contract provisions. The contract which are of unique in nature, the contract which requires a specific focus and are in complex nature, has to have the provisions of those contracts. The project completion or the proportionate completion. Allowances of credit losses. Allowances for expected credit losses. Many of them won't be able to pay their creditors, and how we'll be reporting from the MSME's perspective, how we will be reporting from the other perspective, where the third party confirmation and everyone will be coming into the picture. Let's talk about the impact. First is the inventory, net realizable value. The stock which was with the company as on 22nd of March would be considered for 31st March. This is one. Or else, the moment this lockdown is over, we will be doing certain our audit procedures like a physical verification of that particular stock, and then doing the reverse integration would be a first question. Let's focus on the net realizable value. We cannot ignore the aspect that there would be a reduction in the net realizable value of all the stocks which are held by the company. This aspect cannot be ignored. So one has to take a systematic representation on the NRVs and the value of NRVs into the picture. Now coming to the NRV, there would be a big thing which would be coming into the picture, which is known as allocation of the fixed production overheads. What will happen to that? Net realizable value or the cost, whichever is lower. So our end AS2 and AS2 provide us with that. In that particular scenario, we have to consider the NRV. That particular fixed production overhead would be charged to the profit and loss in this kind of a scenario. So keeping this into the picture, let's see what para we have to refer as per the SSI concern. Entity should assess the significance of any written down and whether they require disclosure in accordance with the AS2 and Ind AS2, as well as para 98A of the Ind AS1, presentation of financial statement, and para 14A of AS5, net profit and loss prior period item and the changes in accounting policy. It is unlikely that the normal production capacity is to be reviewed for the allocation of fixed asset production overhead for the year 1920 because of the adverse impact of the utilization of the production capacity due to impact of coronavirus on the overall economy or the segment in which the entity is operating. Also, we have to look into the picture that perishable items are there. In the case of the perishable items should be reviewed with respect to the expiry date of the product. Example, 22nd March, we had one lockdown. On that particular thing, the shelf life of the particular product is 10 days or 20 days, or maybe 1 month. I believe the 1 month would be over soon, post lockdown. So in that case, what would be done with those particular inventories has to be taken cognizance of, and the systematic way has to be reported into our books of accounts. Impact of inventory valuation. Valuation of inventory other than the date of financial statements. So there are two aspects in this. Whether the inventory was taken prior to 31st March 2020 and before lockdown, which was our period, 22nd of March or 24th of March. Before that, if we have taken the inventory, we just need to adjust. But I doubt many of the cases will not have anything which is prior to 31st March, which is year ending. So let's focus on deferred to the date of the year ending. The auditor would need to comply with the procedure as per para 5 and 7 of SA 501 cited below. If the physical inventory count is conducted at the date other than the date of the financial statement, the auditor shall, in addition to the procedure required under para 4, which is completely having a list of it, doing a proper sampling, ABC analysis, and all. Perform the audit procedure to obtain audit evidence about whether the change in inventory between the count date and the date of financial statement are properly recorded. Now, for contractual penalty, if there is a wise major clause, then no penalty. Wise major, force measure, sir. FORCE. So, is it force measure? It's a force measure clause, and sir, we will have some discussion on this force measure clause because I was discussing one thing in this, which I have kept it for the future. Rent. Many in the lockdown are giving letter to the landlords, or maybe the businessman is asking the chartered accountant whether a letter should be given to his landlord that he won't be able to pay the rent, and your client is a landlord, and he is getting a letter from his client stating that the tenant is asking, due to this force majeure clause, this particular rent in this lockdown should be not there. So clause is there or clause is not there. What will happen to him? It's completely a legal aspect. There is a contingency as per as an auditor. My responsibility is we have to put a contingent liability for that rent in our books of accounts. The reason no one is able to call this as a force majeure. It's left to the courts to interpret that whether the rent can be recovered or when has been foregone due to this force majeure clause. So this is just a matter of discussion. It is my opinion, which may differ from person to person, but it is one of the aspect of it. So keeping this into the picture, let's focus on this. The physical count was not possible. So let's focus that particular date we have not done this, and the auditing and assurance standard expect us to obtain the audit evidence. What kind of audit evidence we should be expecting in this? So we can put an answer to this. What kind of an audit evidence we should expect in this? Anyone? The inventory has been done post to that. 31st March, we were not able to do the inventory. Suppose by 14th of January, 14th of April, sorry, we are out of this lockdown, and in that 14th of April, we are able to start our business. So, what other than this normal, what audit evidence we would be doing to substantiate our procedures, inventory procedures? Anyone? So we go ahead with this. That let it be. What procedures what we follow is, first we have to rely on the internal control system of the company, whether they have been external confirmation cross verification with the books of accounts. Well said. But for contractual, there's penalty. If there is a risk measure clause, there is no penalty. Okay. What I would like to say in this is, rather than going into the external confirmation, first we have to see what kind of a control, as per inventory is concerned, are available with the management. So first is existence of the control. Second is effectiveness of that control, and third is consistency of that control. That control should be consistent throughout the period, due to which if that control has been perpetual in the company till 22nd March, whatever the books of accounts are saying are valid. Suppose that we just need to see what sale and purchase the company has been done after that. Keeping the lockdown into the picture, it is very difficult for the company to do the sale and purchase. This is one thing. But definitely we will have the cases where the people in lockdown also have done the sale and purchases. We will come to the revenue recognition. When we will be discussing the revenue recognition, we'll come to that part as well. But one has to consider this point as well, that controls has to be there. If control are not there, we have to completely qualify accordingly over there, that we have relied, or you can say you have done the back calculations. The stock as on 22nd of March, whatever the additions they have made or the sale they have made, keeping their stock quantity into the picture and valuation of that into the picture. Valuation of inventory other than the date of financials, definitely we have to take all the physical counts, and if we are able to, yes, fantastic. And we have to see the what kind of other information is available for us as per inventory is concerned. That other information will play an important role to us. So SA 501 is at the help. If the physical inventory count is conducted at the date other than the date of financial statement, the auditor shall, in addition to the procedure required under para 4, perform audit procedure to obtain audit evidence about whether the change in inventory between the count date and the date of financial statement are properly recorded. So whatever changes they have been done are been properly recorded or not. Now this is done. But one question: if there is a if Ankita ma'am, if the control are missing or can't be trusted, if the controls are missing or can't be trusted, ma'am, that is to be substantiated. There is something called, you have to go with the reverse integration as per the data is concerned. What kind of a reverse integration has to be done? The data you have available, the data which is reliable by you, once you have to create the reliability of that data, and then you have to see what kind of other documents you can rely on. The other documents are the purchases done post that, the other documents are the sales done post that, the other documents are the stock which they've been maintaining. And this particular circumstances, we are trying to come across a situation where there is proper physical count by you. The auditor has done the physical count. We are not yet deciding a situation where there is no physical count. So you have done the physical count. So you have to see what purchases had been done post 31st March. You have to delete those because that won't be the stock of 31st March. Sale post 31st March or before 31st March, which has to be given a systematic adjustments. So those particular thing has to be considered. These are the only things. Control be there, control not be there. This also. Back calculation sheet will be very important, and this certificate has to be obtained from the management and cross-checked with SA 501 is vital. Yes, absolutely, absolutely. The same procedure can be used for the seasonal stock as well. Yes, ma'am, absolutely, absolute correct. But now coming to the situation where you are not able to do the physical verification. Let's see, we have a certain example. We have a factory in Bosri MIDC, and in Bosri MIDC, there is one area which has been declared as a contaminated zone. The lockdown is open. The auditor can start the audit. He does one unit's audit, but he cannot go into that contaminated zone. What procedures he will follow for that particular unit? Because there is something called threat to the auditor in this case. The auditor would be at the threat. Maybe this example is a bit on a hyper side. Maharashtra has a limited number of cases. Maharashtra opens by 14th of April, but some other state, let it be X state, rather than going into which state, X state cannot open. But there are multiple branches or other units which needs the consolidation as per stock is concerned, and those cannot be opened. In that case, what would be the procedure that need to be followed? Anyone? Anyone? Sir, I believe in any case, auditor's responsibility will not reduce, and hence qualification has to be done. Pankaj sir, this is the finality you are saying. Definitely everything has to be qualified for. Everyone has to have the maintain the quality of the audit. There is no second thought on that. The quality of audit has to be maintained. But let's see that what it's not sure that by doing the qualification we go off with the responsibility. Definitely that we are responsible to give the true and fair view of the financial statement, but at the same time we have to maintain the quality of audit as well. मैंने नहीं देखा is easy to set, but जो देखा उसको कैसे substantiate किया, that is the tough part. Let's focus on the tough part first. We would need to assess whether or their reporting date an adjustment is required to carry out the value of the inventory to bring them to their net realizable value. Agreed with that, ma'am. First and foremost, let's focus on what we were doing with the basic. The basic is very simple. First, we have to see what kind of a controls were there at that time, what kind of informations you have at that time, and you can, rather than qualifying, gather supporting evidence for that if the physical verification can't be done. That's the right one. I will do one thing. I will just split it into two parts. One is qualified, one is disclaim it. And disclaim systematically, where the reader will definitely understand that it was impracticable for you as an auditor to report those aspects. Example, you have to define what kind of a threats were there because of which you were not able to do the physical verification. What uh, didn't permitted you to do that? First. Second, you have to define the materiality of that as well. Third, what informations you have to define that as well, and you have to put those information into the auditor's report as well. And if we can rely on it, that material misstatement won't be there, keeping the audit procedure and the past history into the picture, we can properly disclaim it, or if required, definitely modify the previous qualification as well. Because in the last year, you must have said there is a control, there is everything in place, and everything is systematically going on in the company. But today, you may need to modify that particular qualification of yours as well. So we had a very good discussion on this. I really appreciate the support of you guys. And let's focus on the other part. The other area what I would like to discuss is the impairment testing. Guys, this is one sure that so far when there is a going concern which is going on systematically, we'd never qualified as per impairment testing is concerned. And when I say impairment testing, that we have to define that what is the value and use of that particular asset and the carrying amount. If the value and use has been reduced than the carrying amount, we need to show that as an impairment loss. So, keeping those impairment aspects into the picture, this COVID situation has created that kind of a picture now. Many of the industry would be into lockdown, no production capacity would be there. I have a certain scenarios into the picture. Let's have a practical scenario. I have one company, let's not name it. I have one company who actually, due to lockdown, his complete customer base would shifted to China. And as we know, China is out of the lockdown now. And it is the case that if those machinery or sorry, those clients, if goes to China, due to rate competition, they may never come back to India again. This is the case going on. In this kind of a scenario, this is a complete change in the business model in itself, because you lost an opportunity to maintain a particular client. In that kind of a scenario, we need to revisit as per the impairment of that asset is concerned, because a particular period of time, the cash flow won't be generated. The cash flow, what you have predicted previously, that I have 100 rupees of a carrying amount, and definitely the value in use, the cash flow generated from the net asset value or the cash generating unit, CGU, is more than 100 rupees, as was defined in the previous. Today, keeping these scenarios into the picture, this 110, 120 may be less than 100 as well. So this is a complete change or a paradigm shift as per the cash generating unit is concerned. This is a change in dynamic. We have to be very vigilant when we are reporting the impairment of assets. So far, we never reported, but this time it has to be specifically reported, and a proper CMA, a revised CMA with keeping these scenarios, the COVID scenarios into the picture has to be considered. Let's focus what it has to be done. Impairment of assets and AS28 impairment requires entity to assess at the end of the reporting period whether there is any indication that non-financial asset may be impaired. The impairment testing is only has to be carried out if there are such indicators. If such indication exists, the entity shall estimate the recoverable amount of asset. Let's focus on whether we can call this as an indicator. The COVID, can we call this as an indicator? I really appreciate the participative discussion. Anyone? 36. Ind AS 36. Economic criteria. Ind AS 36 relies on economic criterion for the recognition of an impairment loss. An economic criteria is the best criteria to give information which is useful to the users in assessing the future cash flow to be generated as a whole. In estimating the time value of money and risk specific to an asset, in determining whether the asset is impaired, factors such as probability or permanences of the impairment loss are subsumed in the measurement. Yes, great. Ma'am, absolutely correct. So economic criteria coming into the picture, we are would be discussing a high level of economics. The reason is the whole world would be going into the recession this time. Yes, COVID-19 to some extent will be considered as an indicator. Yes, sir. Absolutely. I agree with you 100%. It is one of the biggest indicator, economic indicator that your asset needs some impairment testings. Because we won't be able to estimate how much time it would be requiring for reviving the economy and coming to the level it was supposed to be on the higher side. An entity needs to estimate to recoverable amount of assets for the impairment testing. Where the recoverable amount is estimated based on the value in use, the consideration on accounting estimates applies. Critical factors management need to consider. Contraction in the economic activity due to COVID-19 is considered to be impairment indicator at the reporting date for the impairment assessment. Assumption used for impairment testing and determining recoverable amount before the outbreak of COVID-19 requires any change. That means what we have defined that cash flow would be generated for or the value in use of that asset would be prior to our cutoff that which was 22nd March and 24th of March would be requiring any fine tweaking. If required, we need to do that. The assumption used to determine discounting rate to measure the recoverable amount if require adjustments. So this how to value the cash generating unit of any assets. Bharat, it's very simple that cash generating unit are the units which has to be identified as per which will generate the cash. The organization can define on the product level, it can define on the geographical level. It's like segmental reporting, or they can consider this whole particular business or the industry as a single cash generating unit. But to be precise with me, the impairment testing should be either product wise because one product will require a separate kind of an asset, other product will require a separate kind of an asset. If the products are the byproduct, they should be treated as a single cash generating unit. If the products are different, altogether different, and the machinery levels and impact would be different. Example, the Reliance industry. Geo is a completely a different cash generating unit, whereas refineries are the another cash generating unit. So this is how the cash generating unit would be. But this would be going into the very detail of it, Bharat. But definitely we will have another conversation on it, and we can conclude those answers as well. So let's define the impact on the property, plant, and equipment. As we are all aware that we calculate depreciation, and how we calculate depreciation on the estimated life. So we have to define what would be the estimated life of it, keeping this into the picture. So there is something called in AS 16, in AS 10 requires that useful life and residual life of plant, property, and equipment need a revision in an annual basis. So due to COVID-19, PPE can remain underutilized or not utilized for the period of time. It may be noted that the standard requires depreciation charge even if the PPE remains idle. Further, COVID-19 impacts may have affected the expected useful life and the residual life of the PPE. The management may review the residual value and the useful life of an asset due to COVID-19, and if expectation differs from the previous estimates, it is appropriate to account for the changes. As an accounting estimate in accordance with Ind AS 8 accounting policy, change in the accounting estimates and errors AS 5, net profit or loss for the period, prior period item, and change in accounting policies. So this is like one has to consider all the elements of the PPE. One has to understand what kind of a borrowing cost needs to be capitalized. If the particular assets require substantial period of time to be incorporated, one has to define what kind of a borrowing cost which need to be capitalized to that particular asset as well. Other than this, now let's come to the very critical factor. This particular COVID-19 will not impact financially in 1920 that much. That much will have an impact on 2021. So, as an auditor, while reporting 31st March 2020, we need to consider post-balance sheet events as well. So, for this Ind AS 10, Ind AS 10 and AS 4, events occurring after the reporting period are considered in two, namely adjusting event, which will require adjustments to the financial statement, and the non-adjusting events, that is, those do not require adjustments to the amounts recognized in its financial statement. In certain cases, management judgment may be required to categorize to the event on the above. Similarly, in accordance with the AS4, contingent and events occurring after the balance sheet, adjustments to assets and liabilities are required to be made for the event occurring after the balance sheet date that provide additional information materially affecting the determination of the amount relating to the conditions existing at the balance sheet date. The impact of cash flow as well as ongoing certainty. Ashok sir, the impact of cash on cash flow as well as ongoing uncertainty will attract impairment as well as also the testing of the going concern assumption. Definitely, sir, but going concern assumption has to be considered in a totality. Going concern assumption depends on many indicators. One of the indicator is that the complete net worth has to be eroded. That means there are continuous losses. As Chandrasekhar sir rightly said with his own wisdom, that a loss of particular period should not define the impact on the going concern assumption. It has to be on a continuous basis. Definitely, we have to see what is the past of that company. Example, if the company is making losses for last 3 to 4 years as well, but prior to that it had certain profits which has accumulated by them, and yet they are intact. So we should not consider the going concern aspects of it. But definitely the impact of cash flow as well as ongoing uncertainty will attract the impairment of assets. Definitely, sir. That I really agree with you. And because of which I took this particular impairment as a critical factor for this discussion. A significant change in the legal factor or in the business climate, as you said, is a shift in, as you said, shift in business. Will there be need to reveal goodwill and other fixed assets? Revalue goodwill. Definitely, ma'am. What we are discussing is impairment of everything. If there is a goodwill which has been recognized, what method it has been followed? Is it because of the mergers or amalgamations, or is it because of certain arrangements what the company has done? The goodwill has to be revisited. The impairment has to be done. Whatever it is, the goodwill or the asset has to be treated as whether there is a value in use or not. Now coming to the event occurring after the balance sheet and what kind of a factors which you need to consider for the events occurring after the financials. The most important factor would be the foreign exchange gain or loss. This is already there, which is an adjusting item. But definitely after that, this impairment, what we discussed, what everyone is having a keen question on, is the matter of concern for arriving at the events occurring after the financials. Maybe till 31st March, there would be a sufficient cash generated by the company, which would be sufficient for the whole process in itself. But post 31st March, the scenario may completely change. Whether there is a fine tuning required for a particular entity for revisiting the cash generating unit and the value in use of it has to be looked into. That is what the suggestion is. Now, coming to one more thing, a small case study we need to discuss. There is something called revenue recognition. I had a recently phase one client who is trying to say me thing that I made a particular product for it's a capital product. I made a product. I kept it in my factory. The client is saying me bill it to me. because of the facility management or the logistic, I'm not able to supply that particular product to my client. But he wants me to bill it, pay the GST on it, definitely, and keep it with you. Whatever the insurance would be, I would be bearing it. So whether a proper revenue recognition has to be done, keeping the accounting standard 9 into the picture. This is my small question. Anyone? I repeat, I have a particular product which is a capital product. Due to logistic, I am not able to transfer it to the client. The client is saying, because of the lockdown, I won't be able to take the delivery, but I am ready to pay you the amount. But it's a capital product. It would be disturbed at my place. So you keep it at your place. I will be bearing the insurance as well. So whether I should recognize the revenue for that particular product. Anyone? In this particular case, the factors are very important. Substantial risk and reward needs to be transferred. So when we are talking about substantial risk and reward, whether risk belongs to insurance, if it is yes sir, it should be recognized in my opinion. Yes, great. Anyone which who differs the opinion? Now let me say one thing. This is what client has said me, right? Whether these facts need to be documented and audit evidence has to be created. When does the revenue when does the revenue recognition will be postponed? Okay. Yes, if the ownership is transferred. Great. But let's focus on one thing. What I'm trying to say is, as an auditor, whether I should listen to what he is trying to say and appreciate it. He must have kept it at his premises and taken an insurance of it, and that insurance would be charged to the client. Yes, if the ownership is transferred, it should be recognized if the risk and rewards are transferred. Perfect. As insurance is borne by the client, risk will be transferred. Okay. Let's focus on one thing. We have to change the way we were doing the audit in the past. That due to this particular scenario. In this particular scenario, there is an event where a particular client wants to show the revenue by 31st March, but due to lockdown, he won't be able to show the revenue. That is first for sure. Because in lockdown, whether he is able to do the sale or not. And if yes, definitely, we should not be the bloodhound, but we should have the substantiative figures with us. Definitely a confirmation with that particular event booked in his books of account, claim the particular GST on it, and taken the credit of it, ITC and every calculations of it has to be considered in this picture. So definitely revenue recognized if the audit evidence is substantiated by the third party confirmations. If not, definitely who has done the insurance? If the insurance is done by them and it is recovered by them, so it doesn't make any sense. But definitely, if the insurance is also borne by the client, we should recognize the revenue as the insurance is borne by this. Good discussion, nice points. And any other queries related to accounting or any other issues related to this inventory, keeping this impairment assets is concerned, accounting for property, plant, and equipment is concerned, the accounting for event occurring after the financial is concerned, revenue recognition is concerned. Any queries? Okay. So I take to the another aspects, which is consolidated financial statement. Consolidated financial statement in this particular pattern will be a complete different paradigm shift in itself. We have to be very strong as per our qualifications are concerned, as per our disclaimers are concerned, on the part of where the particular unit is in Maharashtra and the other unit is in other state, which we defined it. In India, some states would be in lockdown, some state may open, and once the lockdown is over as well, It may have a lockdown or freedom in that particular city in itself. Example, the person from Pune may not be able to go to Nasik as well. These are the cases. I have heard these cases. So it would be a partial uplift of this as well. So a unit in Nasik and a unit in Pune, how will you do the consolidation of it? How will you take care of the consolidation of any unit in Gujarat or Delhi or any other state? इसके आगे. How will you do the consolidation of a subsidiary outside India? Even that has to be taken into the cognizance. So keeping all these factors into the picture, it is very difficult for us to coming at a particular consolidation. The auditor again has to use the audit evidence, the accounting, the reliability of accounting, third party audit, the internal auditor over there, the statutory auditor over there, how reliably he is able to do because of the lockdown has to be very well considered while doing this audit procedure is concerned. It is very critical. And keeping this aspects into the picture, your qualifications, your disclaimers, your modification in the opinion which was previous in the previous audit report, because one has to understand whether that particular audit observation has been sustained or it has been modified. So both the aspect has to be considered in this. Again, if anyone wants to frame a question, he can still frame a question. I don't have any issue with all the topics, whatever topics we have considered right now. Let it be from consolidated financial statement, let it be from impairment of assets, let it be from revenue recognition, let it be from any other area. It's all accounting standards, keeping the complete COVID into the picture, or any other scenarios which you think would be coming into the picture because of the COVID-19. Because I believe the discussion is endless. The clientele, the way of thinking, the way the client thinks, the way the management prepares the contingency plan, the way every chartered accountant will put a intelligence to it will altogether be different for this particular aspect. So it's purely a creative platform, frankly speaking. So one has to put his creativity in line. So whatever the creativity you think, you can put it into it. Just let me know, and I can take any questions if you want. Any? I take to the another aspects. We have only 10 minutes. So 5 minutes I will give to one more topic, which is taxation, deferred tax assets or liability. So keeping this COVID into the scenarios, whether that particular deferred tax asset would be an asset or not has to be considered. So what changes requires as per the taxation, current taxation and the deferred tax is concerned, current tax as well as the deferred tax is concerned has to be put it into the effect. What would happen if the entity business model changes? Okay, impairment is an issue, but what happens if the entire demand becomes zero or the technology becomes obsolete, like Kodak, which became extinct? Very good question, sir. So I will give the answer into two aspects. One is from the management's perspective, and other is auditor's perspective. What auditor has to do in this? There is something called business risk management. The committee has to be formed by the company, and in that company the company has to identify all the risk factors. And recently there is a change in the law. The auditor has to look into the other information as well. And what are the other information? Director's responsibility statement, director's report are the other information. If any information has been misstated in that as well, has to be verified by the auditor. So, what is the business risk management policy by the company? If that particular risk, in the opinion of the auditor, has been not particularly mitigated, has to be reported. First, second, these are the indicators, sir. This any kind of a turnover does not goes to zero in a day. It takes its own merit time. So once this particular turnover is on the verge of getting down, it will always have an indicator where your assets are been obsolete. And definitely an impairment testing has to be done. In one of the scenario, what we know, a pharmaceutical company which was into incorporation stage since 10 years. So one has to understand, since 10 years, pharmaceutical companies technology will be obsolete. So one has to do a proper revision as per their impairment is concerned. So a proper chartered engineer was appointed. The auditor needed a third party expert. So in this kind of a scenario, the auditor should always expect a third party inspector, like a chartered engineer, who is having the first of all, he should have the interest, or he should have the knowledge of that particular industry. Example, a pharmaceutical industry cannot be done by a chartered engineer who is doing a mechanical work. It has to be more of a scientific and a technical in nature. So for understanding that technology, he should know that technology. And what report he gives as per impairment is concerned, that particular asset has a replacement value of this much of amount, then only the particular thing should be impaired or not impaired, or a particular opinion should be based on the third party. I hope I answered your question in a systematic pattern as per impairment is concerned. Good topic chosen by the Pimpri Chinchwad branch. Congratulations. Thank you, sir. Rishikesh Wangade. Thank you. Can you focus more on what are the adjusting events that need to be made post balance sheet considering the current scenarios? Let's focus on the adjusting events. What kind of an events requires adjustments? Let's focus on what we discussed right now. The residual life of the asset has been changed due to this COVID scenario. If you look at 31st March 2020 position, 9 days lockdown or 12 days lockdown will not change the residual life of the asset. But definitely, if the particular lockdown is for a longer period, the residual life will change. This is an adjusting event. Are we clear, Bharat? This is one scenario. Second scenario, let's focus on this. Impairment. Impairment requires cash flow statement for next 5 years, 10 years, whatever the residual life of that particular asset is. So if that residual life is reduced, this is one. Second, the cash flow as on 31st March 20 was 100, but keeping the scenario into the picture of 2021, that goes to 90 or 80, then you have to have a fine tuning of an impairment of 10 rupees or 20 rupees. That requires an adjustment. So keeping those into the picture, I kept the adjusting examples into the picture. Any other scenarios anyone else can put it into it? We can definitely discuss on that part as well. So Bharat, I hope that answers your query. So I have only 5 minutes. Keeping the taxation into the picture, uh, this particular lockdown will have a very big impact as per the other aspects are concerned. The taxation, the interest, the calculations of salaries, ESIC, PF, and termination benefit, and the contractual obligation. What we discussed in this particular scenario. One has to discuss now, keeping this was from the reporting perspective. The event after balance sheet till the finalization of the economic situation as on the date would require elaborative disclosure. This may require a guidance note from the ICA. Definitely, sir, this may require a guidance note because now that 50-page publication what has been issued, which I have referred it very well while making this presentation. This is a part of it, and this is institute's documentation only. I have gone through it very systematically. They have dealt with it, but definitely I appreciate point that a detailed disclosure requirement due to COVID-19 would be required in this. But changes in residual value is an accounting estimate and requires prospective effects only. Sir, accounting estimates is there definitely, but you are forming an opinion on example. If you are forming an opinion somewhere in August, and you are trying to say the balance sheet is not impaired, the asset is not impaired. So you have to redefine that particular thing, and we have to create a readjustments for that particular assets as well. Change in accounting estimates. See, accounting standards are to be synced with each other. Change in accounting estimates is definitely a part of it, but whether it will have an impact on 31st March 20 balance sheets, readers need to know or not has to be known to you. So your instinct would be on the theory, my instinct would be on the practical part, which says definitely it will have the impact on 31st March 2020 balance sheet. This is my opinion. So let's focus on the other aspects or economic life. Definitely the same. Other aspect of this particular this was the dates which has been shifted and what would be the impact of that. Uh, Client's aspect, the one has to understand from the client's aspect whether we need to plan interest on term loan or the taxation which we need to pay, or the calculations of GST which we need to defer, or the return which has been postponed, or the Vivad Se Vishwas scheme on which 10% has been reduced now. The 10% which was additional after 31st March has been reduced now. It is not there now, which has been extended till 30th June. So one should definitely take the benefit of it, keeping into the pictures. So other circulars and everything will be followed in that. And I have just 2 minutes. Any other queries, I will answer those. Because I try to put it all the pictures into one this. There are money accounting standards. Maybe some would be having lease. What will happen to lease kind of an arrangement? What will happen to this? So what would be the relevant factor of that has to be considered at that time and has to be taken care of. Any other queries would be taken? 2 minutes. So I just give a vote of thank. First of all, I would like to thank Simran. Simran ma'am is an amazing personality. I know her very since very beginning, and I really appreciate the time and effort she gave to understand and what kind of a topic can be considered in this. And me, Marathe sir, Simran ma'am, put in a lot of effort to understand and what should be the content of this topic. And they've been part of this whole scenario involved. As Rishikesh sir said, a good topic chosen by Pimpri Chinchwad branch, so definitely it goes to a Pimpri Chinchwad branch. And I thank Pimpri Chinchwad branch to give this opportunity to me. This help us in this lockdown period as well. And last and few words I will say, let's pray together for this country, and we'll definitely come out of this particular scenario of the COVID-19 situation soon after this. And definitely we will have a great economy. As Bloomberg has estimated one thing, that world's economy now 28% would be holded by China, and US would be reduced to 9%, and who would be coming up with is India, which is by approximately 15.5%. So with these words, I close my stream, and thank you very much. If any issues, you can always contact me. Thank you very much.